Welcome to The Explainer. We are diving straight into the massive sell-off that's absolutely rocking the crypto world right now. We're talking billions wiped out and just extreme fear gripping the markets. So what on earth is going on? All right, so here's how we're going to break this down. First, we'll get a handle on just how bad the damage is. Then, we're going to look under the hood at the mechanics of the crash, check out the bigger economic picture, and then see how different investors are reacting to all this. And finally, we'll get to the big question. What in the world comes next? To really get what's happening, you have to appreciate the sheer scale of this thing. The numbers we're seeing are, well, they're pretty breathtaking.
Let's just start with this one. 95%. 95% of the top 500 altcoins are in the red. I mean, just think about that. For almost every single alternative coin out there, the vast, vast majority of people holding it are now underwater. They're sitting on a loss.
And we're not just talking about numbers on a screen. This represents a truly historic and frankly brutal 24-hour period where over $19 billion was forcefully liquidated from traders' accounts. That's money just gone, wiped out in a domino effect of forced selling. And this crash, it's not just about the numbers, it's about the psychology. The market's main mood ring, if you will, has plunged deep into extreme fear. We are seeing a level of panic and pessimism that we just haven't seen in months. Okay, so let's get into the weeds a little bit. What is actually driving this? We need to look at the on-chain data. The information that's recorded right there on the blockchain to see the technical pressures that are causing this massive sell-off. So, for altcoins, the picture is just incredibly bleak. More than 80% of their entire supply is now being held at a loss. This puts the entire altcoin market in what analysts call a historical capitulation zone. That's really just a technical way of saying people are giving up and selling like crazy. But Bitcoin, well, that's telling a pretty different story. Even with a huge 23% drop from its peak, almost 70% of all Bitcoin is still being held at a profit. Now, it's definitely feeling the heat, but it's showing a kind of stability that the altcoins just don't have right now. So, okay, besides whether the coins themselves are profitable, what are the price charts actually signaling to the pros? Are there any patterns starting to form in all this chaos? Well, analysts have spotted this classic bearish pattern on Bitcoin's daily chart. It's a textbook signal, one that traders know well, that a previous uptrend has likely reversed. This suggests the downward move isn't just random market noise, it's a validated technical trend. And that brings us to the crucial point. Traders are watching these levels like hawks. If Bitcoin breaks its current support level around that $93,600 mark, the charts are suggesting the next major line of defense, the spot where a lot of buyers might finally jump back in, is way down around 85 grand. And this pressure, it isn't just some theory. It's coming from all sides. A massive 815,000 Bitcoin were sold by long-term holders in just the last month. And at the exact same time, the new spot Bitcoin ETS, which had been buying everything up, saw almost $870 million flow out in a single day. The sellers are, without a doubt, in control. The crypto market doesn't exist in a vacuum. Right now, it's getting slammed by these powerful global economic and political forces that are just pouring fuel on this fire. What's happening in the wider world is having a direct and negative impact. You've got everything from big regulatory moves in the US, like a potential ban on a government digital dollar, to the sudden reignition of the US-China trade war. It all just proves that crypto is still very much connected to the traditional world. And this really highlights the deep geopolitical game that's being played. The US is focusing on private, regulated stablecoins, basically digital tokens pegged to the dollar, to keep the dollar on top. At the same time, China is pushing its own state-controlled digital yuan like crazy to try and challenge it. And for a global investor, that just creates a whole lot of uncertainty. Okay, now, inside all this market chaos, there's a really fascinating story playing out. We're seeing this great divide between two very different kinds of investors, and they are behaving in completely opposite ways. So, Bitwise's chief investment officer pointed out this really stark split. On one side, you have the early adopters, the crypto-native investors. A lot of them got absolutely burned by collapses like FTX, and right now they're just kind of sitting it out. But on the other side, you have investors from traditional finance, or TradFi, who are just now getting into the market, and they're using these new regulated products like ETFs.
And you really can't ignore the massive influence of whales. These are huge investors whose moves can create tidal waves. One whale apparently made $200 million just by betting against the market. Their huge sell-offs trigger these cascading liquidations, and the chaos gets even worse for small traders when the exchanges themselves have outages, locking them out while the market is crashing. So, with all of these intense pressures coming from every direction, what does the future actually hold? Is this the start of a long, cold crypto winter, or is this just a really painful but maybe necessary correction before the next big run? Well, the most immediate danger is this. The average price for all the money that poured into the new Bitcoin ETFs is just over $90,000. If the price falls below that line, all of those new investors will officially be in the red, and that could turn all those historic inflows we saw into panicked outflows really fast. But there is a really compelling counterargument from people like Matt Hugin. He actually suggests that a quiet, boring market right now is a good thing. The idea is that it prevents a dangerous bubble from forming and could be setting the stage for a much stronger, more sustainable bull run in 2026.
So this long-term bullish view basically sees all the current pain as a healthy transition. The speculative early crowd gets flushed out, the market calms down, rebuilds a stronger foundation with traditional finance, and then new innovations come along and fuel the next big cycle. It's a painful reset for sure, but maybe a necessary one. And that really brings us to the core tension in the market right now. Is this just a temporary storm that we have to ride out before a big recovery? Or are we watching a deeper, more fundamental shift in who's driving the crypto market and where it's all headed next?
Thanks for joining us for this explainer. Ultimately, it all comes down to whether this new wave of traditional money has the stomach to hold on through the storm, or if the ghosts of crypto's past crashes are just too strong to overcome. The answer is really going to define the next chapter for this entire market.